XRP is going to $589 today. Yeah, you may have seen the XRPL Foundation post yesterday, and no, it's not $589. What's actually happening is an amendment to the XRPL's swappable AMM curves. So if you're confused on what that all means, that's normal, and that's what we're going to break down today. But first, take off your moon suit. You look ridiculous. What most retail investors care about is price, speculation, and fill in their bags, right? And there's nothing wrong with that. But institutions, they have completely different priorities. They care about liquidity, settlement, market structure, efficiency. And that's why this new XRPL discussion around swappable AMM curves is actually a big fucking deal. So bear with me and don't fall asleep. An AMM, or automated market maker, is basically the engine that helps digital markets function automatically. But here's the important part. The curve design determines how liquidity behaves, and it can affect things like slippage, pricing, spread efficiency, and capital requirements. And this matters because not all assets behave in the same way. Something like a meme coin or a stable coin, foreign exchange, and tokenized treasury bills should not all be treated the same way and use the exact same market structure, right? That would be like designing a Formula One track and an airport runway in the exact same way. Different systems require different liquidity mechanics, and this XRPL proposal is exploring the idea of making those liquidity curves swappable depending on the asset or use case. So this moves blockchain further away from a simple retail speculation and closer towards programmable financial infrastructure. And we've been talking about tokenized assets, on-chain FX, stablecoins, real-world assets, and institutional liquidity systems, and the industry is splitting all that into different layers. So layer one could be retail speculation. Layer two is payments and stablecoins. But layer three, well, it's financial infrastructure. And the chains that survive long-term may not be the ones making the most noise, but more so the ones that best handle liquidity, compliance, settlement, and interoperability. Sound familiar? Yeah. Now, before you get into your rocket launcher again, this does not guarantee XRP adoption, and this does not guarantee price appreciation. And it does not mean that banks suddenly use XRP tomorrow. But if XRPL becomes part of the plumbing behind tokenized finance, that changes the conversation entirely. And the biggest opportunity seems to be becoming less about speculation and more so understanding where the infrastructure is being built. Anyhow, let me know if you agree or disagree, and comment